So I've been investing in SCHD daily for well over a year now, and in today's video I want to talk about the results of nearly $13,000 invested in SCHD. We're going to look at how much dividend income I'm receiving from it, but on top of that I want to answer one question in particular. What I'm looking to find out is the best strategy to approach this investment moving forwards. You see, because I've been investing daily, but I want to backtest this on a couple things. What I'm looking to answer is there a better way that I should approach investing into SCHD, albeit it could be daily, weekly, monthly, or yearly. I'm going to be starting to look at all the figures to determine if maybe I should shift my approach. Let's get into it. Okay, so first things first, let's go over the results. I got the trusty Robinhood app open right here, and you can see that I'm in my Roth IRA. Currently got about $32,000 in here. There's only two investments in this portfolio, SCHD and VTI. You can see SCHD right now, $12,910 has been invested in it. So I click into it. Let's just go over what the results of this looks like. So if I go over the past year, you can see that there hasn't been much action with this particular ETF. It's gone up 0.72%. But what's great about SCHD is that it actually pays those dividend payments. So if I scroll down and I start to look at what's been going on with my history, you can see all the recurring buys that I've set up. Now, I have it set to basically hit the Roth IRA max by the end of the year. It's investing $14.70 every single market day is open within this account. And so that's going to continue for the rest of the year. And then after that time period runs out, I'm going to restart this investment, invest every single day next year to also hit that max in this account. So if I go ahead and look at the dividend history, you can see right here exactly how much I'm getting paid. So June 30th, 2025, I've reinvested, and that's the key to all of this. You want to reinvest everything that you're getting paid within this account just to have that compound growth much quicker. You can see when I first started in this back in March of 2024, that's actually when I transferred these funds into this account. I was getting $58.66 every dividend payment, but now I'm getting close to $120, and this is just going to continue increasing in the future because I'm reinvesting these dividends and I'm investing more and more every single day. So it's really cool when you get to this point. It scales pretty quick. There's like a little snowball. It was great to hit that $100 mark for this one individual ETF. And you got to keep in mind all of this compounds with my other investments that I have as dividend payers. So it's cool to get that passive income one way or another. So yes, although you looked at that stock chart and it was only up 0.72%, it doesn't really factor in all of these dividend payments that I have now received and that I'm going to be reinvesting into this portfolio. So it would be a lot higher of a return. Now, if you want to look at the stats that I have within this portfolio, here you go. I've got about 474 shares in this $12,910 market value with an average cost of $25.04. Makes up about 43% of this portfolio. I want to get it closer to 50%, just so I can chart it against something like VTI. Now, you got to keep in mind VTI, completely different approach to investing. That's like targeting more growth. It's hard to compare something like SCHD to VTI because there's two different purposes that they serve. Now you can see the total return on this is well over $1,000, $1,047 right now. And the cool part is, again, that doesn't really factor in those dividends that I have received. So it's really cool to see that stuff. Today's return alone is up $140. And that's really cool because as you scale up your investments, you know, a 1% return is pretty massive for a day. And as this continues getting higher and higher value, that 1% could look like some crazy returns to this portfolio. So just keep all of that in mind. So now I want to backtest this and answer the question. When it comes to dollar cost averaging over time, what would have been the best approach for me with something like SCHD? So what I'm going to do is go ahead and I'm going to backtest this portfolio. And what that means is you can look at all the historical data that comes from the stock market and the returns that we've got. But I just want to show you what it would have looked like had I invested this every single day, every single week, every single month, or every single year, a lump sum going into the investment over time, because the results are actually pretty shocking. Okay, so the next thing that I want to know is, did I get the most out of this investment for the past year? Now I'm going to do a back test on this as if I had invested $10,000 either at the beginning of the year, if I did it every single month, if I did it weekly, or if I did it daily. And my goal is just to figure out what the difference in the return would have been. Now I'm at this website here, testful.io, and it allows you to backtest your portfolio to see the results. I got 4 different tabs set up, and as I scroll down, you can see just the general setup of what this looks like. So this was starting last year on July 22nd, all the way to this year, July 22nd. Starting value is going to be $10,000, and I'm not going to be contributing anything else. Let's say I just threw that in at the beginning of the year. Well, what would that have turned into? And as I can scroll down, you can see based on this chart, if I hover over the last day at the very bottom there, you can see $10,336. You also got the return right here. So really, really cool that you can set it up that way. But now let's look at some of the other returns. Now I did the math and I figured out that if you were to invest monthly, then you would be investing $833. Now, a lot of people will come in here and use a tool like this and they forget that they need to set the starting value. If you don't set the starting value at that same contributed amount, then it's going to throw your numbers off. So we start with $833 on the 22nd of 2024, and then we are going to be cash flow. We are going to contribute every single month $833. So you can see the total return is checked off. Sorry, as I got to scroll down a little bit, you can see I checked off the total return. Which again, it just reinvests dividends and distributions that are made in the portfolio. And you can use this to test like any other tickers. You can do it against other portfolios. It's a really, really cool tool. So I'll scroll down just a little bit more and you can see that doing this every single month, we would have had $10,820. So that's cool to see. I mean, that's a pretty significant jump from $10,336. But what would that have turned into had we been investing every single week? Let me click over here. And you can see again, just setting that weekly contribution cash flow here. We're looking at $192 every single week. Scrolling down, let's see the results. And we've got $10,223. So very interesting that every week investing was worse than the other 2 methods. But now let's compare that to what would have happened if we invested every single day, which honestly is the method that I have been using. So you probably got the sneak peek there. We're going to be investing about $39.68. And if I scroll down, you'll see it's $9,949. So I literally, for this past year anyways, have been investing in the worst method possible out of the ones that I've outlined, but I want to explain a couple things. Okay, so first, if you just look at the chart, I mean, this all makes sense for the past year. You can see it was up at higher values all throughout the year. So every single day that I was investing even when it was at the high of $29.34. And for a majority of this past year, looks like July through April here, it was at much higher prices than what we were looking at today. So all of those were, it just makes sense. Investing monthly, you're capitalizing on some of these like really big dips that are over here, which is super nice. So it just helped diversify it a little bit and spread out your investments. Now, and if you invest at the beginning of the year, obviously it's slightly higher than what it was when it first started. Plus you're getting all those dividend payments. So now, from a holistic standpoint, when you're looking at what strategy is actually the best over time, it's a little bit hard to answer because, hey, let's say you started investing, November or December here, where it's $29.53. Well, if we put $10,000 in at that one point in time, we're looking at a really, really bad negative return of around 9% over that time period. And if you're investing daily, you're capturing these dips and you're going to get a much better return. Same with weekly or monthly in this. And it kind of is going to fluctuate what return will be the best based off the time period that you're looking at. Now, this was just for the past year. You can also apply it to the past 5 years. So again, you could still make that lump sum at the price when it's at an extremely high level, or maybe you made a lump sum investment back in January of 2022, which is right around the same price that we're at today. So you're going we're talking about years of investment here, and you're not getting much of a return in terms of the appreciation of the particular ETF in that case, versus if you continue investing while you have these other dips, whether it be monthly, weekly, daily, those returns would definitely be better than what you're getting had you done the lump sum here. So that's something you got to keep in mind as you're trying to target which approach makes the most sense. Now, the numbers weren't that drastic because we're only looking at a very short-term investment period. In the future, I'll do some charting on what it looks like, maybe with some more drastic examples. However, I personally think that just spacing out your investments to where you feel comfortable with and you're continuing to invest in the market will always be the answer. You should never try to time the market. I don't think, like, for that particular reason, that you could invest at all-time highs and then everything absolutely tanks, especially in today's day and age where the market is honestly just extremely volatile. So you'll never know what kind of swings we're going to get. But anyways, guys, I hope you did like this video. If you made it this far, you might as well drop a like on the video. It really helps get it out into the algorithm. And if you want to check out the investment strategy that I've been doing in that Roth IRA, comparing a little bit of SCHD to VTI, go ahead and check this video out right here. Thank you. Have a great day.